Yo, YouTube. So I'm back again with a different type of video. So this video, I'm gonna show you guys how to spot a market maker buy model. So a market maker buy model is pretty much when the market is going from selling, lower highs, lower lows, and then we get a switch with the high being invalidated with a retracement and a continuation. So this is your market maker buy model right here. So this is how this works. So if you can see here, all of these lows are being disrespected. This low, disrespected. This low, I'm sorry. This low, disrespected. This low, disrespected. Then you have this here. So essentially this would be considered a market structure shift. So this is the ideal market maker buy model right here. So this is just when price is bearish and then it flips to bullish. This happens on all time frames, the daily time frame, the 1 hour time frame, 15-minute, 5-minute, 1 minute. It happens on all time frames. So this model is fractal because of that. It happens on every single time frame. So sometimes market maker buy models happen inside of market maker buy models. So it could be a market maker buy model on a 1 hour and then form another one on the lower time frame, which is the 15-minute, the 5-minute, 1 minute. So as long as you understand this price action right here, you should be able to spot it on any time frame. So this is how this works. So essentially this will come down until somewhere down here. This will be a higher time frame PD array. So this is a higher time frame PD array. It could be an order block, could be a fair value gap, it could be a liquidity sweep. Any of those things are higher time frame PD arrays. So once price mitigates that, you can expect a reversal from that area, which is essentially this market maker buy model right here. So once this happens, this is the first leg up. So there will be some displacement, order block, inversion, fair value gap somewhere in this leg from here to here. There will be some sort of PD array for you to take longs here, which is a low risk buy model. Well, low risk buy opportunity from this area here up. So all you have to do is just understand market structure. So once you understand market structure, it's the same concept over and over. So this is the market. I'm going to mark this out actually. This is a market maker buy model. So now the same thing, this is market maker buy model structure. This is how it's going to form on any time frame. When you're looking, when price is selling off and you're looking for a reversal, this is what you're looking for right here. Once this occurs, buyers are in the market. So now you can start to look for longs from somewhere in this first leg. You can continue it up. So once this breaks right here, there will be another retracement into this leg, and then it'll continue up. So this is the market maker buy model on the buy side. So now I'm going to show you the sell side. So sell side is the same thing. Going up, pull back, going up, pull back, going up, pull back, goes up now, comes back down, retraces back up, first leg to sell off. So now we're going to do this right here again. This high, disrespected. This high, disrespected. This high, disrespected. So all of these lows are protected once we trend up. So once the low gets broken, now again, this is going to be a higher time frame PD array again. Somewhere up here is going to be a higher time frame PD array. that's gonna force this first leg down to break this low. And the same thing occurs. Market structure shift, first leg down, retracement. There's going to be some PD array, fair value gap, order block, inverse fair value gap, one of any of those three, whichever you like. It's not a specific one you should choose or you shouldn't choose. Whichever one is there, you take it based on your trading strategy and you take it. And now your target is this low. So now all of these generated lows right here, generated liquidity right here. These are all targets. Target here. Target here. Price may not push down in one day to hit all of these targets, but this can be the main target right here. That first low, I can make a sell model. That first low, once this low is broken and it retraces, this is your next TP is here. So based on any of these PD arrays, you can sell, target this right here. So now this is how it looks on the higher time frame. So now let's go to this. So now on a lower time frame, you see this right here? I'm just going to mark out this right here. So this is a higher time frame. It's going to be clear like this. But on a lower time frame, it's the same thing happening, but it's not going to be as clear for you to spot. Sometimes it will. Price can be clean. Sometimes it's choppy, but nonetheless, it's still the same process happening on all time frames. So once you get the higher time frame bias, you just drop down time frames and you work your way down, making sure that every time frame aligns with the higher time frame bias. So now with this right here, so this leg right here will not be this clean on the lower time frame. So on a lower time frame, it'll look like this. So we're selling, selling, selling. So on a lower time frame, it'll look like this. Push back up, push back down, sweep, come back down, continue. So it's the same thing. It's the same exact thing. This is a little sloppy, but you get the point. So this is the higher time frame PD array. Oh shoot. No, I don't want that. I want this. So once this is the liquidity sweep right here, lows are being broken again. Lows disrespected. Lows disrespected. Oh shoot. This thing is hard to work with. Anyway, you get the point. We sweep here. So now this is the same low. So now this right here is the low broken into the PD array. Right? Same thing up here. You see? This low is broken. Now it goes up. So now on a lower time frame, it's going to look a little bit more choppy. But the same principles apply. So you break this low right here, and then we push up. Short-term high right here, push down, then we push up. So now this is the market structure shift right here. This is the market structure shift right here. So now, again, the same thing applies here. There's going to be a PD array in that first leg up. The first leg up right here is here. This is the sweep. This is the first leg up. There's going to be a PD array somewhere in here. This could be a breaker blocker, fair value gap, order block, same thing. And then target the high. Same thing with the market maker sell model. Same exact process. Up, up, high taken, high taken. Now this is where it get choppy now. So up here, it's not just gonna push up on a lower time frame. So this thing could come down, stop you out right here, fake you out, and then push up. Now all of this right here is still a sweep right here. This is still a sweep. So now all price is gonna do is then come down. Could still fake you out, push up. You can buy and then come down. So you'll get caught right here, buying right here, and then price is just gonna push deeper into the PD array and then push down. So the same thing applies here. Highs are taken, sweep the first leg. This is the market structure shift right here. This is the market structure shift right here. So once this gets swept, there's a PD array somewhere in this area right here. So now all you're looking for is the retracement into a PD array in here. Like I said, fair value gap, order block, breaker block, inverse fair value gap, whatever is there is what you look to find your trade entry at, targeting the lows. If you're on the sell side, if you're on the buy side, you're targeting the highs. If you're on the low side, you're targeting the lows. I'm not sure if this was shown in my in the video, but if it wasn't, here you go. This is it, a clearer understanding of it. So this is literally the market maker buy model and market maker sell model. This is to sum it up in general. Once price is bearish, you're looking for a higher time frame PD array to buy from. If price is bullish, you're looking for a higher time frame PD to sell from. In other words, a reversal. So this is what you do in a sell position and a buy position. So this is the whole synopsis of the market maker buy model and sell model. So now I'm going to jump over to an actual chart, and I'm going to show you guys how this works. So as you can see, price is coming down. Look at this. Price is bearish right here, right? So this is the market maker sell model right here. So this is the buy model, right? So this is the market maker buy model right here. As you can see, we pushed up. This is how this works. Market structure shift here. This was the market structure shift. And what did it leave behind? A fair value gap. Price pushed up again, sweeping this high. Sweeping this high, right? Now it comes back down. What is here? Fair value gap. Now it pushes back up. So this is the market maker buy model. This market structure shift here, retracement. Push up, didn't break it here. Push back down, fair value gap here. Pushed up, retrace back again, pushed up. So now, now this is the market maker sell model. This is the market maker sell model. So now you see here, we broke this low, pushed up, came back down, pushed up. This isn't the cleanest, so this is not tradable. You can trade it if you want, but this is not clean for me to trade, so this is not appealing to trade. But as you can see, this is the market maker buy model. This is the market maker sell model. This is how this works. Market is fractal. It just goes up and it goes down. If you look at the market like this, you have no problem understanding how structure moves. So this is how it goes. Goes up, goes down. Now you're going to see here that market is going to start to turn again. So now watch this. So now, let me delete all of these actually. So now, as I said, this is the market maker sell model. So now price is trending down. So now price sweeps this liquidity right here, right? So now that price swept this, I'm looking for price to come up here and break this here. All right, this is gonna confirm that market has switched into a buy model. So now let's just pray price out. It's okay. So now Price swept this low. So now I'm looking for price to break this high. I'm looking for price to close above this high at some point. This is going to confirm the market maker buy model. This is 2 a.m. So this is around London session. So you see here, there's a market structure shift here. You see, price broke this high. This was the last high that was formed before price made another low, a lower low. Now we made a higher high. So now I'm expecting price to make a lower low somewhere in here. So this is when price is on a sell like this, trending down like this. This is all generated liquidity. Liquidity here. Relative equal highs here. So this is what price does. It just generates liquidity. So as you see here, all of these lows are liquidity. Liquidity here, liquidity all over the place. Liquidity here, liquidity here, liquidity here. So that's all price does. When it's on a buy model like this and price is trending up, all it's doing is just generating sell side liquidity so that when the price switches from bullish to bearish, now all of these lows are targets. And the same thing goes for buys. So as you can see, now I'm gonna show you right here. So now I'm expecting price to make a low somewhere in here. So now watch how this isn't clean because there isn't a fair value gap or anything, not enough confluence for you to take a trade here. But just watch how price operates. So now this market structure shifts. So now I'm expecting once we have this shift, like I said, that first leg, if you check right here, market structure shift, the first leg and the retracement with the second leg is the previous high before the retracement. So this is the previous high before this retracement. So now when it retraces, I'm looking to target this high. So now this is how this works. So as you can see, like I said, that first leg is right here. Once it retraces, you look for a PDA where you could have dropped down time frames, whatever you prefer. But the bias is the generated buy side liquidity is the targets. So whatever you do here, you're targeting this and this. These highs probably will not get taken in one day, but there's no need for you to hold a trade this long. This is not going to happen unless it's news, FOMC, NFP. But on a normal day-to-day basis, a couple ticks in a day, this is your move right here. So now this is the first leg, right? This is the first leg. This is the retracement. This is the second leg. So now you can expect the retracement and the third leg to come and sweep out all of this resting liquidity up here. And the same thing goes for the sell side. So I'm just going to run this back here. So now these are the resting lows right here. So now price took out this high. So now being that this low is all the way down here, there is a swing low right here. So if price breaks this low, it can confirm the sells. So let's play price out and see what it does. So you see price wick past here. This isn't clean price action, but you can get the idea of what I'm trying to do. This low, it's gonna take a while for you to wait for this low to be swept. You can, but it's gonna take you a long time for this to get swept and for you to wait for the retracement and get that. So now let's wait and see what price does. So now we needed a closure below this. All right. So now you can wait for a retracement anywhere in this area. So this is considerably the first leg. This is the retracement. This is not clean to trade. This is not even during New York session regardless. So it doesn't really matter. But now this is coming into the New York session right here. This is on Wednesday. So price should come somewhere up, back up in here. Sometimes it just falls like this. So this is London session. So now price just continued to fall during London. So now there's a fair value gap right here, right? So this is out of session, so this doesn't even matter. So my computer didn't record. It stopped recording. But anyway, so now this is coming into New York session right here. So now as we continue to play price, there's a fair value gap here. So now I'm expecting, because we broke this low right here and confirmed the bearish bias. So now there's no PDA rate anywhere in here. This fair value gap is way too far in price for price to retrace all the way back up here and then to fall down here. We're down here. We're likely to react from this closest fair value gap to sweep these lows right here. So now we're gonna drop down to the what time is this actually? This is 6 o'clock. Okay, so now we're gonna drop down to the 5-minute time frame. So now all we're doing is just waiting to see what price does in this area. So as you can see, like I said, this is the 1 hour fair value gap. So now I'm just dropping down time frames and seeing what price wants to do in here. So I'm not looking for a trade until around 8:30 New York session. So now I'm just gonna play price right now. So now the same thing. Now here. Now I'm looking for a confirmation of sells. I'm not looking for a buy right now. I'm looking for a sell model to target all of this liquidity down here. So I'm not touching price until it confirms that or it doesn't. So you see here, price swept it, but it didn't close. I need a body closure below this level. Now we get the body close. So now this is the first leg retracement, second leg. So now I'm interested in getting into this third leg push down to sweep this. So as I stated in these sell models down here, first leg, second leg. I'm sorry, first leg retracement, second leg retracement, third leg. So now this is where we are now. This is the retracement, first leg retracement, second leg retracement. I want to take an entry on the third leg. So now let's see what price does. So now we have a fair value gap right here, actually, right here. So this fair value gap, I'm expecting to come down and sweep these lows right here. So I'm gonna act as if this is an ideal trade. So I want to put my stop loss above the previous high because the highs are being protected here. So I'm gonna put my stop loss above the previous high just to give my trade a little bit of breathing room if it wants to get a little messy. So now let's see what price does. So now we're tagged in, right? So I'm just gonna press a sell here just to show you guys a real money. Not real money, but so now this is my target. So now price should fall. This is around 8:30. So this is a continuation of London. So London left 1 hour, left this fair value gap. Now New York is just continuing from the London setup. But the main target is still sell side liquidity. So now let's see what it does. Boom. And this is how this works, just like that. And if you're not comfortable on a 5 minute, you could have took this on a 1 hour and still made profit. You could have entered your trade here and put your stop loss somewhere either here or above this fair value gap and targeted these lows for a 1 to 2, 1 to 3. But on the 5 minute, you get still same thing, 1 to 2. The difference is the time of the trade. So this trade was about 30 minutes. We took this entry at 8:25. It hit TP at 8:55. So on the 1 hour, you would have entered this trade at 6 o'clock, and it would have hit TP at 8 o'clock, 8:50, 9 o'clock. So you would have waited what, 3 hours, 4 hours for that trade. I like the 5 minute because the 5 minute, I want to be in and out. It's all about personality. I am not patient. I'm not the most patient in the world. I have patience, but not that much patience. I don't like sitting here watching the charts for too long. I like to get in, get out, enter, TP. So the 5 minute works for me. But if you're not comfortable on the lower time frames, you can do this on the higher time frame because this strategy is fractal. So you can do this on all time frames, the 4 hour, the daily, 30 minute, 15 minute, 5 minute, 1 minute, whichever time frame you like. The same strategy, the same principles, the same model, it all applies. So this is how this goes. So I hope you guys like this video, found some knowledge that you gained from this video. There's gonna be a ton of more videos because this is just not the main, the end all be all. There's different, fractals into this strategy, but this is the main synopsis of the strategy. This is the main structure. This is the hub. And then you open it up, and then you got different layers inside the hub. But this is the hub of how I trade, the strategy that I use. And like I said, this works on all Forex pairs. I'm not sure about stocks. Not too sure. Stocks, maybe volatile stocks like SPY, SPX, Tesla, those futures. But this works on any chart, any time frame. This is how you do it. And once you understand this, the rest is history. So I hope you guys liked the video. Like I said, I hope you guys found some insight, gained some knowledge from it. I have a Discord link in my bio where I send everything. I'm fully transparent in my Discord. I send my trades. I send videos of my trades. I send the pre-analysis, the post-analysis. I send everything and anything in my Discord. So if you guys are interested and you like, this strategy, the link is going to be in the description below. But I hope you guys like, comment, subscribe, because there's going to be a ton of more informational videos after this. See you guys on the next one.